Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, May the 19th. My name is Eric Wilkinson. Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, May the 18th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data across the pond. We've got Great Britain retail sales coming in at 2.3%, expected to be 1.2%. So pretty good on that front. Then here in the United States, we got a initial unemployment claims came in at 232,000 claims versus the expected 240,000 claims. Lower in that regard is better, less people claiming unemployment. Also, last month's revision was right in line with what was released. Then we also got Philly Fed manufacturing, knocked it out of the park at a 38.8, was expected to be 19.9, so quite a lot better than what was expected there. And we have Treasury Secretary Mnuchin speaking today as well. The leading indicator for the CB came in at 0.3% in line with expectations. Natural gas storage came in at 68 billion cubic feet build, expected to be a 61 billion cubic feet build. So a little bit bearish on that front. More build means less natural gas being used. And then later on this evening, we get Mario Draghi speaking. So keep your eye out for that. He is the head of the ECB. Onto the overall markets, we've got crude oil moving again in the positive direction, up 26 cents, came just about 7 cents shy of getting to that psychological mark of $50 a barrel. That is going to be more psychological than anything else, like I mentioned, but the key is that we are starting to see these 50-day and the 200-day cross, which is more of a bearish sentiment. And keep in mind that we have had lower lows and lower highs. If this were to kind of roll over, that would be more bearish. I'm still trying to get out of my USO at this point. Still working a 10-cent bid. Some people, we used to ask ourselves, do you want the penny or do you want the trade? Well, right now I obviously want the trade rather than the penny, because I've been working a 10-cent bid and it gets down to about 11. Just I'm not getting hit on those 10s, so just still waiting that out. I'll talk about that here in a little bit though. Gold giving up, a few dollars after yesterday's massive rally. Later on in the day, we had, after my market commentary, we saw the equities accelerating to the downside. Gold futures, being the flight to quality, were rallying on that economic data. So gold futures giving back just a little bit today as the equities are pushing higher. But just despite the fact that equities are moving higher, gold's given back. The bonds, after yesterday's really big rally, still in positive territory, not giving up much ground, up 8 points on the day. Don't really see it getting too far outside of this bell curve here, as the Fed is pricing in continued rate hikes, despite the fact that what the tantrums are being thrown in the equity markets. Bonds should be pricing that in, as the Fed fund futures are still pricing in that rate hike at towards the end of this year and in the fall. We've got Dow Jones Industrial Average up about 9 points on the day, just slightly higher after yesterday's massive sell-off. It was almost a 400-point sell-off yesterday. And when I was talking in this daily market commentary, we had kind of bounced off of this 50-day moving average, and I was talking about in the next few days we could see this gap being covered. That was going to be a target. Well, lo and behold, they covered that gap yesterday and today. So that gap is completely filled in. So we don't need to really talk about that, but I wasn't expecting that to happen in one day, although yesterday's acceleration to the downside accomplished that goal for everybody. NASDAQ leading the way to the upside today, back about 32 points. They were down over 100, I think about 150 almost yesterday towards the end of the day. Today could be looking like a breather. This candlestick doesn't look that bullish at this point. A lot of times you'll get this, what we used to call on the floor as a dead cat bounce, and then the next day you see that acceleration to the downside, but we'll have to wait and see if that actually happens or if we start seeing a little bit of support here. Same setup with the E-mini S&Ps, only up at almost 2 points right now, 2 points as we speak. And again, this is a very similar situation to the NASDAQ chart, where this could be just a resting area where you get a big down move. We start seeing a little bit of consolidation before more acceleration to the downside. It's still up in the air, but just to keep that in mind, it is just because we're having an up day here and showing support, it isn't a clear picture as to a chart setup. So it's gotten below this 50-day moving average and now acting as resistance. We did pierce above that, but the bulls need to get above that to save face, if you will. This is the 30-minute chart of the E-mini S&Ps on a 20-day breakdown. Each one of these areas is one full day. It includes the overnight session, but as you can see, overnight we really accelerated to the downside, probably as a bunch of longs really decided to puke out. Overall, overnight market got probably unduly short, and coming into the day session, the market just blasted off, putting as much pain to those day traders or those weak hands as possible. Onto the XOP, this is the Oil and Gas Exploration Fund. They've been lagging this whole crude oil rally, which has a tendency to happen where the XOP USO as well will lag the overall crude oil move. That's very forward-looking. These are more of lagging trades, so that's why I kind of like to play those, is play the lagger, and that's what I've done in here with XOP. Decided to go in and throw a trade in there. It has high implied volatility. It's above 50. My rule for this is above 30 to get into these ETFs. So in XOP, I just went into the June, sold the 32 puts for 47 cents. The reason why I went with those, slightly better than, or slightly tighter than what I would normally do. I usually go to like the 16 delta. This is just inside of that, but I thought 32s was a very nice area, and you can see that they came. This is going to be the 33s is going to act as a lot of support, as it did in the past. 32s is below the 52-week low, so got myself into a good location for this trade. So that's why I implemented the XOP trade at that level. Then onto XLK. Yesterday, with the NASDAQ being the massive leader to the downside for what it seemed, down over 150 points, these technology sectors really got beat up. So as you can see, with XLK being the ETF for the technology sector, we got a massive spike in volatility in there. Put that above 50 as well, so decided that would be a good opportunity to start selling some premium. Anytime I get the opportunity to sell premium these days, I'm jumping on it. So I went into the June, sold the 52 puts for 27 cents. Now, I don't know that we're out of the woods yet, but I figure if I can get below this value area high, that's going to act as support. So I am also below what is going to act as support here at around 52.33. So I've got a couple of lines of support there. I'm going to have a pretty tight leash on this, but you know, especially if the broader market starts selling off tomorrow, let's say, I'm going to probably have a really short leash on a few of these puts that I've sold. Then on to Apple. Now, if you guys remember, I have a synthetic long in Apple. with the 155, long 155 calls, short the 155 puts. Yesterday's big sell-off, Apple just got beat up, caused the implied volatility to spike back up again. So I decided to create this synthetic long strategy with a covered call. So I implemented a covered call in the high implied volatility, just kind of like you write it up. I'm long the 155 calls, remember? That's where I want it to go up from. That's right around where my break even is for all intents and purposes, slightly lower than that, but we'll call it 155. And I went in and sold the June 160 calls and was able to collect 87 cents for it. So I got a nice premium for that. Those 60 calls, the 160 calls, you know, above the 52-week high. So if it gets up to 160 at this point, I'll be happy to be having those called away from me. But lowering my overall basis at the same time, trying to reduce my risk on this by lowering what I originally paid for this strategy by implementing those covered calls on that synthetic long strategy that I did for the webinar. Then with Pandora, yesterday kind of tested me on my short puts, short the 9 puts in here. Yesterday got tested on that. Just playing the probabilities, decided to leave that on. Today I had a nice move to the upside on the opening, but it's kind of since started giving back ground. So in order to do the same thing in a similar situation to what I did with Apple, I decided to create a strangle in Pandora, not just naked the short puts. So I went into the June, sold the 11 calls for 36 cents, increased my credit for that, limit my risk or my opportunity on the upside in a sense, but I've also created a strangle with that. So I have a nice, I've increased my credit, which increases my break even to the downside, which is what I'm more worried about at this point. So I've created a strangle there. And then finally, the trade that I did for the earnings trade, I tweeted this out last night on Twitter before the close. Actually, it was quite a bit before the close. Started looking through some of the things like Target did better than expected and actually got beat up. I was a little bit worried about same thing happening with Walmart. Walmart usually has more upbeat earnings calls, so decided that they would probably be in the same boat as Target, beating earnings, and have an upbeat call, which would cause them to possibly gain some momentum. So I just sold some puts in there and went into the May, sold these 72.5 puts. Originally sold them for 39 cents, I believe it was. 39 cents, and bought them back for 3 cents, sorry. So nice profit on that one. Quick one. We're kind of rolling down to the end of the earnings season, so these bigger stocks are going to become fewer and far between to find. But at the end of the day, at this point, earnings season has been pretty good, despite the fact that I had a bit of trouble in IBM. So the rest of them have ended up working out pretty nicely. So that's about all I got for you guys today. Like I said, I am still working my USO trade, trying to get out for 10 cents on that one. Thought with this big move above this value area, and if it can go up there and test that $50 a barrel mark again by the end of the day, I should be pretty assured that I will get those for about 10 cents. So still working that strategy, squeezing out that last half penny or whatever it's trading at. So that's all I got for you guys today. Tomorrow's webinar is going to be on synthetic shorts. So if we start seeing this market sell off again tomorrow, that's going to be the perfect opportunity to start selling some of these overbought stocks short and collect money on the downside. And the beauty in this is you don't have to borrow, you don't have to own it before you start shorting this. We can just start synthetically short and participate in the downside just like you would with a stock that you were long and participated on the upside without all the hassle of shorting a regular stock. So find out how we do that with less margin at protraderstrategies.com, and I hope to see you guys all there. If you can't take that, take it easy.